Hello everybody, welcome back to another video. So in this video, I'm just going to be doing some technical analysis over the one trade I had today. It was a small confidence building win after to end my losing streak. So I'm very happy to end my losing streak. I feel like the changes I made to my plan have already started to take effect, and I have even a new change. Not a change to my technical process, but a change in the psychological preparation for each trade. So let me show you that change right now. So sorry, these are my messages with one of my trading friends. Ignore this, but let's go ahead and take a look at the Pete Trades Discord. I call it the 432 trading community. That's just like a cool number, has some significance. So yeah, that's why I named it after that. Yeah, just kind of a cool thing to me at least. And so this is what I changed. Before I used to take trades, I would ask myself these questions. And these are kind of useful, but there is, even here, the fifth one, long, short, or sit out / wait. What, why? You need to have a what and a why for every trade you take. That's something that Brad Wolf, Al Brooks' personal mentor, actually reached out to me and told me. So shout out to Brad Wolf. I know he does not watch the channel, but hey, if you ever see this, shout out to you. Because this guy, he's a really great trader, and he reached out to me and told me you need to have a what and a why for every trade. So I included that, and that's good. But it's much more succinct like this: four technical questions, 2 psych questions. It's actually even shorter than this now. It's just 1 psych question. I just made it this first one here. Will I be surprised if this stops me out? Anything less than very surprised means I don't take it. And this will help me to avoid impulsive trades, just to avoid bad trades in general. And then the first technical question: is there a potential ATR move on the table? That's the moves I'm trying to capture. And yes, I often will only go for 1R wins, but sometimes I want to try and hold for a big win, hold for 2 or 3 hours. So, yeah, I think asking these questions will be very good for me. So anyway, do I want to go into the technical analysis now? No, I think I want to show you guys more about my process. So, I think I went over this a bit yesterday, but I won't go over this too much, but this is just like kind of how I prepare. I go through these, mental systems, and I try to prepare for the day. And the night before, it just helps me do some basic work, some prep work, like looking at what market moving events are coming up, making sure I'm adjusting my key levels, which my only key levels are the prior day high, the prior day low, and the prior day close. I think that's all you really need to worry about, and that's based off Adam Grimes and some other market wizard type guys who are really legit good traders. I do have pivots on too, by the way, which are these dotted lines. So this is resistance 1, resistance 2, and then down here, support 1, support 2. I think no point in not having that on, and it gives me a good gauge for when we're gapping. Like, if we gap way beyond R2, it's like, how much more can it really go? Maybe it'll do an oops reversal. But if it gaps and it's only at support or resistance 1, hey, maybe it'll go to resistance 2. Did I say support 1? I meant to say resistance 1, if I did say support 1. So what happened today? Well, what did I do? This is what I did. This is when I got long. Hammer bar up, consolidation, hammer inside bar. Similar bar here, bar on bar 3. It looks like it actually did tick above this bar. I did not trade in here. I did not. I wasn't watching for the third bar. I'm kind of glad I didn't because I might have got long here, and it looks like it may have came back and stopped me out. But I don't know. Maybe it went down, went below first, and then went up. I don't know. But when I entered, it worked out for me. So I entered with the break of this high. Put my stop loss below that candle, and it went my way. And I only had 3 contracts on, and let's look at my data here. $70, 1.14 R trade. I only risked about approximately 4 points. There was a point where I almost added more when it was down here, and I had orders in. Let me make this bigger for you on YouTube. So I got in the break of this high, and it went up a bit, and then it came back down here, and I had 3 more like buy orders in here with like a stop below bar 3. I might have actually had it below bar 1. But yeah, if it would have dipped like this much lower and then turned around, my win probably would have been more than double the size that it was. But I don't care, guys. I was on a losing streak. I'm no longer on a losing streak. I broke the losing streak. So I'm very happy. Now, let's look at this flag up here. This is a good buy here, I think, on bar 19. It would have failed, but I think this is a good buy to buy the break of this signal bar. You're only risking about 3 points. It would go up, reject, and then it would fail. Then it would go up again. And then you'd get your hammer up consolidation bar, and you could try to get long again on here. And then it really pushed up pretty high, 4 points. Another consolidation, another push up. Now we're 4 points higher than the high of that bar. Consolidate, consolidate, push up again. Consolidate, hammer up. Consolidate. Oh, come back down. Back up. Oh, consolidate. And yeah, pretty much just ranges and then it turns around. So I think after these 3 bars here, that would have been a great time to get out. Because look, let's just like step back a little bit. Let's look at this move. It went up like that much. It went up about 14 points. So, measured move, I can assume, hey, the next move might go up about 14 points. You get in long here. You set it for just 10 points higher because, hey, maybe it won't go up as much. But if you can just get 10 points out of this or even just like 7 or 8 points out of it, hey, that's a great trade. So, 2 great trades to take this morning. After bar 3. And then this is like a 2-legged pullback. So once it comes down and makes this leg, I think going for a measured move is a really good option. After these bars, it's like, hey, how much further is this really going to go? We're already, we're kind of at the ATR on the day, the average ATR value for historic trading of the ES of the S&P 500 futures. So let's just look at the other indexes or indices. I think indices is plural for index. So let's look at the other. I don't know what the right way to say it. Look at the other indexes or look at the indices, the other indices. That just doesn't sound right to me, but maybe it is right. Anyway, RTY, very different day than MES. and NQ. Let's look at the daily. So this is the MES daily, a hammer down. MNQ daily, hammer down. RTY was just down the whole time. RTY never really went up. And RTY was not the better index to trade today because it was an inside bar. It was inside yesterday's bar. We don't trade inside the yesterday's range unless we're trading with the hourly trend. And the hourly trend for RTY is bullish. Okay? It's bullish. The 9 is above the 21. We are bullish on RTY. If we're inside the prior day range, we only want to take longs. So that's just how it goes. RTY, so no good trades on RTY. MNQ. Traded very similar to MES. Pushed up, kind of flagged a bit, and made a second measured move up, and then it just ranged the rest of the day. Did not really do much at all. No good trades really after the first 2.5 hours of market action on MNQ. All right, I think that I covered the change and let's just review. I covered this change, which I think I messaged my friend Russ. Yeah, right here. So I covered this change. Feel free to copy this and implement it into your own trading if you like, and ask me questions. Definitely join the 432 Discord. We're having some nice talks in here lately. With Gaming Too Good and with Azen. I hope I said that right. So we're having good talks in here. It's great. Come learn. Come trade. It's cool. It's a chill place to be. And we're always trying to learn and grow and get better together. So, what more could you ask for? And hey, I have this voice channel down here too. So if you ever want to chat, hop on a call, let me know. We can hop on a call and discuss the markets and life and whatever. So I showed you guys that. Check. I did my technical analysis. Is there anything else I should cover? Oh, maybe what my prediction is for tomorrow or how I'm going to trade tomorrow. We are in a bullish trend. It's gone up quite a bit though. And we're going to be approaching all-time highs. Are we at all-time highs already? Okay, so MES, SPY is the closest. S&P 500 is closest to all-time highs. I saw a really interesting prediction about RTY, and it said that Russell Index is actually going to perform the best over the next year or two, over the next market cycle. And that's from a guy that Jason Shapiro follows. Jason Shapiro is a market wizard. And I followed him on Substack recently, and one of the people he recommends, I followed them too, and they said that RTY is going to do really well over the next few months. So I think in my IRA, I actually bought some 3x leveraged RTY. So we'll see what happens with that. Not a big investment or anything. I don't give investment advice, but it's interesting that he recommended that. So that's where I'll leave it. But RTY is way below all-time highs. So, hey, maybe RTY will be the best bullish play tomorrow. I think probably, though, if we're going long, we want to trade the index that has the most relative strength. If we're going short, we want to trade the index that has the most relative weakness. So I think right now MES has the most relative strength. It's closest to all-time highs. You probably would be fine with NASDAQ too, since it's trades very similarly to Nasdaq trades very similarly to S&P 500, and seems like there's lots of money getting invested into tech right now. I think the new administration is going to be very like friendly to tech stocks. So I think tech is, I mean, tech's been the dominant industry the last 20 years. And going into the AI, with AI in the future, I think tech is definitely going to just keep being the most important industry. You know, I saw this quote about a year ago, and it stuck with me. It said that like what oil was, like petroleum, to the 20th century is what chips are going to be, like chips, you know, Nvidia, AMD, Intel, that type of thing, Broadcom. Those are going to be what oil was to the 20th century to the 21st century. So I thought that was super interesting. Obviously, Nvidia and Broadcom are crushing it. I think Intel is in the toilet. I think AMD. I haven't really followed AMD, but I think AMD is not doing too good either. But I don't know what Taiwan Semi is doing. I'm not like a swing trader, but I follow it because, you know, my dad trades these stocks. My dad's just retired actually at 66. So he's interested in the stock market, and he's owned a Broadcom for a while, so he's been pretty happy with how that's done. So yeah, that is it. I've been rambling for like 5 minutes now. I'm gonna end the video. Thank you for watching. I appreciate it. Please press the like button because it helps the algorithm, helps the channel grow. And I really appreciate you. So thank you for watching, and I'll see you at the next video. Peace.